How you doing, guys? This is Eric from RuleTheWasteland.com. I've been talking for a while in my videos and especially on the live streams about how with this continuing economic decline of the US, the way that I thought we would see this happen is eventually a melt-up. But for that to happen, there has to be some kind of impetus or basically some kind of excuse for the Federal Reserve to just do a massive money printing. Because basically there isn't the political will, and obviously they don't want to get blamed for just creating money out of thin air to a much greater degree than they're already doing for no reason. So normally they do that as a response to some kind of crisis, economic crisis. So we've seen them do these kind of symbolic rate hikes of 50 basis points, which is like 0.5%, and those are pretty much already priced in where everyone's like, oh, see, the economy's recovering, we can raise our interest rates by 0.5%, where but they've still created something like 80% of all the dollars in existence have been created in the past 2 years. So obviously inflation is inevitable. It happens with every fiat currency. Ours is going to be no exception. In fact, it may be one of the most extreme examples when all is said and done. But that doesn't mean that in the short term there can't be and won't be like actual crashes, deflation, depression type stuff, because we are seeing massive depressionary forces when it comes to the overall economy. It's just that the currency is going to experience a massive inflationary expansion simply because there's no other way for it to go. With our dollars, the US dollar is created as an instrument of debt from the moment the Federal Reserve notes anyway, not the original US dollars that were gold backed, but the Federal Reserve note, what you know today as the US dollar, the nation's fiat currency, is created as an instrument of debt. For every dollar in existence, there is more than that in debt. So there will always be more debt in existence than there are dollars available to pay it off. It's impossible to pay it off. This also means when debt and valuations decline, when debt goes away, money is literally disappearing. So this idea that this currency system can't really sustain a depression or deflation in the standard sense that we think of it, because all the money would literally just disappear. But the thing is, those forces are happening. So what they're going to have to do in response to that will be a bunch of crazy things. And I'll get into that in a second. But right now we've seen the Dow go down for a few days in a row. It's down almost 5% the month, almost 10% year to date. Same thing with S&P 500. It's even worse. It's down something like 8% for the month and over 13%, I believe, year to date. So these are pretty significant declines, especially in a expansionary environment with the currency. They've been able to blame it on all sorts of things, and like I just mentioned, they always find something to blame it on. They're going to say the Putin price hike, they're going to say, coronavirus, they're going to say supply chain disruptions and all this stuff, and some of those things are actually happening, and of course are also affecting the economy, but the currency is a separate issue. You can have economic disruptions and a stable currency. You can have a terrible fake currency like we do and still have a booming economy in other ways, because we've been there in the past with the U.S. But now we're approaching a time where both things are going to be reaching their inflection point of disaster, the economy and the currency at the same time. Hold on.
Hold on to your butts.
As more evidence of the actual economy contracting, and that's, like I said just a few minutes ago, that's one of the important things a lot of people don't understand, is you can have economic contractions and still have the currency in a melt-up mode, because the currency is its own beast. This fiat debt-based currency literally has to expand or it disappears. And if it disappears, go watch Chris Martinson's Crash Course. He explains how you need the continual expansion or else it goes into a collapse mode. And this can't happen because literally the money disappears. There would be no money. So of course, it can literally happen if the government and the powers that be decided to sit back, let all the money disappear, let all their power disappear, let the entire country devolve into a bad day in Bosnia where everyone's literally killing each other, starving to death, things like that. That's not going to happen. They much rather always, this is why it's happened this way every time throughout history when these type of currency problems arise. They always just create more of it. There's no limit to how much you can create. It's so weird to hear people like, I think Harry Dent come out and say, that when this debt collapse starts, there's no way they can print that much money. There is no limit to how much money you can create. They don't even have to necessarily create it with the debt attached. If they want to get even weirder, they can do direct asset purchases from the Fed and create an infinite amount of debt, or they could literally just use the constitutional authority to coin money without debt and just create more, these $1 trillion coins or whatever else they need to do to just create money. There is no physical limit to the amount of digital dollars that can be created. Obviously, the paper currency, there's physical limitations to that, but already only a tiny, tiny fraction of the money that exists as physical paper currency or coinage. And that's another thing that people don't understand. Like, bank runs are not the money running out. People still think today that banks lend out depositors money, and that a bank run is when everyone tries to go in and get the money, like, oh no, we've lent it out. That's not the case at all. That's the simplified money multiplier method that they teach, which is actually incorrect because they don't want anyone to know just how horrible and ridiculous the way money is created really is. But depositors' money is never loaned out, for those of you who don't know this. When you get a loan from the bank, they are literally creating that money out of thin air. And if they have $1,000, the 10-to-1 reserve requirement that they have for lending out money is not the way that some people think. If you have $1,000 in the bank, they don't get to lend out $900. They get to lend out $9,000 with that $1,000 as being the reserve. So now you know why banks have the biggest buildings, as the man says. But a bank run is simply a limit on the physical cash. Physical cash is determined by completely separately from how much the banks have on loan, on reserve requirements. It's based on seasonal trends and all sorts of other stuff, and how much is going to be physically represented in cash. So that's what a bank run is, literally just people trying to pull out the money, and the physical paper isn't there to represent it. I kind of got off on a little bit of a tangent, but the process by which money is created is so simple, the mind is repelled, as the man says. So I like to make sure everyone knows how this works, because it affects everything too. I always like to, it's always interesting when people have these crazy ideas about what the government should do for the economy and for money and for, wages or capitalism. And whenever someone starts wanting to talk to me about that stuff, I usually ask them first, I'll say, all right, before we get into that, if I go to the bank and get a loan, like a mortgage, where does that money come from? And when they don't know, they never know the answer, or they get it wrong, obviously, that it was, they don't usually say it was created out of thin air. So I say, all right, I try not to be rude about it, but I say, if you don't even know where money comes from, why should I listen to you about what we should do with the money and what we should do with the economy? Like, go learn a little bit about how this system even works before you have a prescription on how to fix it. But that's going off on a rage tangent. The point is, we're going to see contraction in the economy, which will start this, debt collapse, and then their reaction to that is going to be a massive melt-up inflationary cycle. So as part of this contraction, we're already seeing mortgage rates are over 6% now for like your basic mortgage rate, which is insane when you think about how quickly that's gone up. This is not unprecedented, even though house affordability is apparently only about 0.5% off its all-time high of like unaffordability at its all-time high. So the houses are almost the most unaffordable they've ever been in the US by only 0.5%. Mortgage rates are up at 6% right now, which, like I said, is not unprecedented. This happened before. They've been actually significantly higher than that for brief periods of time. But consider how quickly this has happened. I bought this house, and I'm sitting in right now, in April of last year. 13 months ago, I got 2.5% interest rate. Now, that was good interest rate because my credit was good. I had a VA loan. But still, if I were to go get one now, even I would still be, 5%, 5.5%. I might not get the full 6%, but that's insane. It's at least a doubling in a single year. In the meantime, the value of this house has gone up roughly 30%, allegedly. Of course, I'm not going to sell because I would have to buy it in the same inflated market or rent somewhere, but it's definitely a weird situation. So we're going to see really quickly if this housing market can sustain in a 6% interest rate environment. They may even do crazy things like some other channels on here mentioned. Good point about them probably pushing for like 40, 50 maybe even 60-year mortgages just to bring the payments down. That way you can get people can get a mortgage at 6% and still afford the monthly payment, which is all people normally care about. If they can afford the monthly payment, they think like they can afford it. They don't care if they're paying 5 times over the cost over the life of it. They're like, oh, I'll refinance later at some point. So basically, we're entering a very precarious time right now. We're starting to see some major indicators of this contraction, and it's going to get weird. But I do think that their reaction to this is going to be to inflate and to melt up. So I think we'll see crashes in the debt market, in the stock market, in the overall economy, and the response will be blow it up. Because they're not just going to let it collapse and them lose all their power. Because if you just let all the money disappear with the debt collapse, you're not paying your police, you're not paying your military, you're not buying your drones, you're not buying your bombs, and that's another point. That's probably one of the things that they're going to use to not only make an excuse for this contraction, but to make an excuse for juicing spending, is an expansion of this conflict with Russia and NATO. So I'm definitely, at this point, I am expecting that to expand significantly. Unfortunately, I'm expecting them to use that as an excuse for massive printing and just to juice economic activity. And it's going to be weird.
Charles, get the rifle out. We're being fucked.
So what can you do? Or can we do? Now, of course, it's not financial advice. I'm not a financial advisor. But since we are expecting, at least I'm expecting, a contraction initially, I don't think it's a bad idea to have a decent amount of cash on hand, and I'm talking literal physical cash here, to take advantage of these dips and just to sit out while this stuff plummets. I wouldn't necessarily sell out what you already have, but I think cash shortages will happen. I think prices will spike down in a lot of things before they go up. There's going to be a lot of deals. And I think precious metals are likely to eventually go roaring back up. But even stuff like stocks, precious metals, cryptos, which I think will all go up immensely when this inflationary expansion continues, they could all see spikes initially too. So I wouldn't sweat it too bad if you have your assets go down. Don't sell out at the bottom, just hang on. I'm convinced that there's going to be a massive printing afterwards. And if there isn't, then it doesn't really matter. I mean, because with the amount of how overextended our country is in terms of debt, just individually, the country, every level, states, schools, everything is just massive, massive debt. If they, for some crazy reason, decide to go the dirt nap route and just let the debt collapse take its natural course, it won't matter what. I mean, we're talking about full-on shit at the fan at that point. I think we would see like Walking Dead style collapse if they just let that happen, because there would be no money and we have no stuff. We don't make anything. So it would just be like a literal utter collapse if that happens, which is why I'm convinced that's not the way they're going to go. They're going to go the money printing route. So everything will go up in price. Not everything will go up in actual value. So that's why you need just, I think it's a good idea to have some cash and anything that's real stuff. Land, especially if it's productive land, precious metals, food, obviously, water filters, tools, anything that's real physical stuff. And even cryptocurrencies, I think some of the major ones obviously will maintain their value, but I'm not an expert in that, so don't take my word for it. Thanks for watching, guys. Let me know what you think and what you're doing to be prepared for all this, and I'll talk to you later.